Hello, good evening. It's November 5th, 2020, Thursday evening. I'm going to talk about this book written by Jamie and was organized by Jamie from Tim Sykes. Tim Sykes DVD. This lesson is going to talk about the sample strategy. Here's the license, sample penny stock strategies. Number 1, buy earnings and contract winners strategy. Buy earnings and contract winners, BECW. Difficulty, easy. Listed stock, medium or OTC. Orientation, long, to buy. Long means buy. Suitability, novice traders. Introduction. Buying earnings is and contract winners is one of the most basic and yet most profitable penny stock strategies. This strategy relies on finding stocks that are subjected to catalysts that will strongly impact the price action. What to look for? The interesting stocks for this type of play are usually represented by companies that offer real products and are backed by proper business models. The ideal price range per share is usually between $1 and $15. These type of plays are usually funded by following the market reactions on contracts, win news, and earnings, attempting to predict price action without having a strong hypothesis and supporting technical factors will often not yield any profitable result. In the case of earnings, it's worth knowing the company's history and how the market has previously reacted to this type of catalyst. On the other hand, contract winners rely more on the essence of the contract itself and how it will impact the core business of the stock it represents. BECW stocks are usually characterized by a strong increase in volume and price. If the catalyst is announced before the market open, this can result in a morning spike. As we mentioned, be wary of past price action to similar events, and also keep in mind the general state of the market, as it may have an impact on the overall performance of the stock in question. How it works. In order to play a BECW type of a strategy, you must know some of the technical factors. about the stock. These elements should be interest, 52 weeks high, 52 weeks low, key resistance and support, current price versus resistance and support, past behavior on contract wins and earnings. Knowing these elements allows you to form a sound hypothesis on how the stock could potentially move based on the current available information and how it was perceived by the will of the market in the past. Entry signal. A BCW play is characterized by a significant increase in volume and price following the announcement of the catalyst. When the price is near a resistance or support line, it usually indicates that the stock might experience a breakout and the start of the momentum trend. An overnight catalyst announcement or pre-open for the next session could be a precursor to a morning spike. In order to profit from BECW plays, it is the best to notice that catalyst as close as possible to its announcement and perform a buy order early in the momentum price action. Exit signal. A profitable exit on this play depends on your RMS. Based on the stock, its fundamental factors, and its price action, you may wish to have a preset profit target or wait for signs of price reversal before closing your position. Your exit will be based on your hypothesis and how you expect the stock to behave in the short and mid-terms. More specifically to the BECW plays, if you expect the price to continue to rise, it is usually wise to keep the position open as long as possible. On the other hand, if the stock has a history of a limited upside or the sector is experiencing a virtual resistance point, it is best to evaluate a maximum upside and exit the position once this threshold is attained. Keep in mind resistance lines and reaction to the catalyst. Number 2, buy dips strategy. Buy dips, BD, difficulty medium, orientation long, suitability intermediate traders. Introduction. Buying dips builds upon the previous strategy of buying contracts and earnings winners. As the price peaks, shareholders log profits by selling their shares. thus driving the price down. This provides a new opportunity for traders to enter a potentially profitable position by understanding that while many shareholders log their profits, many others look for a renewed opportunity to enter the stock at a price lower than the peak. This type of a situation starts with a peak, then a drop in price, the dip, followed by a bounce that often retraces the dip and sometimes results in a breakout event. What to look for? Much like for the BECW strategy, the BD strategy relies on finding stocks with a reaction to earnings or contract news. Please refer to the What to Look For section of BECW, as it describes essentially the same requirements that the BECW strategy has that are also necessary to the BD strategy. Additionally, BD plays are strongly reliant on support and key support lines for the concerned stocks. How it works. In order to play a BECW type of strategy, you must know some of the technical factors about the stock. These elements should be of interest. 52 weeks high, 52 weeks low, key support and intraday support. Current price versus resistance and support. Past behavior on contract, wins and earnings. Knowing these elements allows you to form a sound hypothesis on how the stock could potentially move based on current available information and how it was perceived by the will of the market in the past. Entry signal. Entry for DB strategy strongly relies on support and key support lines for a given stock. While the BECW relies on an early knowledge of the catalyst in question, the BD strategy requires watching how the price behaves near the support or key support. In similar terms, a support line that is not crossed is usually a good signal for entering a BD position, as it strengthens the price line for the stock and prevent a potential breakdown resulting from the lack of interest. Also, conversely to the BECW strategy that relies on price action and volume, the BD knowing the worth of the news and company, coupled with the knowledge of a strong support line, represents a sound entry signal for BD strategy position. Exit signal. A profitable exit on this typical type of play depends on your RMS based on the stock. Its fundamental factors and its price action. You may wish to have a preset profit target or wait for signs of price reversal before closing your position. Your exit will be on your hypothesis and how you expect the stock to behave in the short and the mid-terms. More specifically, to the BD play. Sorry, typo. I typed while I was reading, didn't see the screen, sorry. More specifically to the BD plays. If you expect the price to continue rising, it's usually wise to keep the position open as long as possible. On the other hand, if the stock has a history of a limited upside, or the sector is expect the projection once this threshold has been attained. Keep in mind resistance lines and the reaction to the catalyst. Number 3, strategy number 3, short overextended stocks. Strategy: short overextended stocks. SOS, abbreviation SOS. Difficulty medium, listed stocks, hard on OTC, orientation short, suitability intermediate traders. Introduction: the shorting overextended stocks strategy focuses in stocks that have had a major increase in price without necessarily having a sound catalyst to back the price hike. This is usually the result of a speculation from traders, or simply the fact that the traders take a position on a stock that shows volume and the price action based uniquely on technical factors. What to look for? The SOS strategy is about looking for stocks that show a major increase in price in a short period of time, matching a supernova type of a chart, while not having a good reason for experiencing such an overextended of the price. The type of strategy applies to stocks of any price, ideally with a high liquidity, 100K plus volume on the day, and volatility. Stocks suitable for SOS plays are usually represented by companies that don't have proper businesses in place and don't offer good products or services. This can be further investigated by looking at the SEC filings. The main indicator for these stocks is the obvious lack of proper catalyst that could be attributed to a rise in price. No earnings, no contract wins, and no news to justify such a move. Stock for an SOS play usually spike 5% to 10% in the early morning, or have been uptrending for a certain number of days. However, they don't show any news that would normally create such a reaction. How it works. In order to play a SOS type of strategy, it's important to know some of the technical factors about the stock. These elements should be of interest. 52 weeks high, 52 weeks low, key support and intraday support, key resistance and intraday resistance, current price versus resistance and support, past behavior on the stock, recent average price point, and the chart pattern. Knowing these elements allows the trader to form a sound hypothesis on how the stock could potentially move based on the currently available information and how it was perceived by the will of the market in the past. Additionally, digging into the SEC filings to find out the financial health of the company and the actual worth of its products, services, reaffirms the speculation that the stock will eventually crash. Entry signal. Entries for these type of plays are hard to evaluate as they rely on traders realizing these type of plays will have their own particularity in terms of price action. SOS plays rely on constantly watching the price action and noting signs of reversal of the price, which may indicate a potential breakdown. This is based upon intraday support and resistance. When the stock is ready to crack and the level 2 shows a wall of sellers, this is usually an indicator of a good time to short, sell the stock. Pay attention to this, please. Readers, watchers, this is important, okay? When the stock is ready to crack and the level 2 shows a wall of sellers, This is usually an indicator of a good time to short sell the stock. Lots of people use the price action, but use level 2 is another way to identify the price action. The stock will or is ready to crack, means going down. Okay, go on. Additionally, this type of play can be done by using a boxing position strategy in order to ensure balance until the stock price is ready to crack, which may increase the potential profit. Exit signal. A profitable exit on this type of play depends on your RMS. Based on the stock, its fundamental factors, and its price action, you may wish to have a preset profit target or wait for signs of price reversal before closing your position. Your exit will be based on your hypothesis and how you expect the stock to behave in the short and the mid-terms. More specifically to the SOS plays, you will need to consider support and key support lines as a potential stop for the drop in price. If the stock has historically been able to be maintained at a support line, there's a great chance that it might fail to drop below that price point, unless there are fundamental factors to support that behavior. Case study. For the purpose of getting a good idea on how a SOS strategy applies, we will use a company's symbol called VLTC. It is another extreme example of the true volatility that exists within the realm of penny stocks, and how this volatility can be exploited in order to generate a profit. You guys can look for this, okay? VLTC. The book published in 2011. So I don't have the chart here. It's hard for me to put that picture here. Okay, go on. Much like a DGLY, VLTC is a play that doesn't occur often and shouldn't be considered the norm when it comes to an overextended stock or an SOS strategy. Context. On March 31st, 2015, billionaire investor Carl Icahn increased his stake in VLTC to 52%, acquiring around 4 million additional shares of VLTC at a price of 1.36. He previously owned 29% of the company. Following this announcement, VLTC was progressively picked up by social media and gained attention of traders. This trend lasted about 3 weeks before reaching its peak at 21.75 per share from its 1.01 starting point. Wow, that's a big increase. Over the course of the next 14 sessions following the Carl Icahn announcement on March 31st, VLTC encountered a 21,000% increase from its starting point. During that time, the stock was subjected to much social speculation about the behavior of the price action, which led the market to consecutively trick traders into shorting the stock, only to squeeze them out of their positions, shorting after. This contributed to pushing the price all the way to $21.95. This peak represents an extreme overextended of the price action given the actual company and the news supporting it. In a sense, traders expected cracks at multiple levels during the ramp up leading to the supernova. The hyperbolic movement then became indicative of the inevitable crash and significant drop in price that ensured the massive rise, the immediate retreat of the supernova move that drove the price to its peak, followed by a series of minor bounces, unable to hold their levels. This in turn resulted in a succession of support breakdowns. May of 2015, the price has dropped around $11 a share from its high within 5 trading sessions. Potential profit for short positions. VLTC is the perfect example of an overextended stock, a victim of its own success. The high demand for its shares from long-in positions, coupled with the recurring expectation of a crash from short sellers, resulted in an unsustainably high price point for stock price below $1 weeks prior. Potential short entry point for such a stock. In sense, each significant sign of reversal was considered as a potential signal for shorting a stock. However, attempting to predict the peak is the reason behind the repeated short squeeze event that occurred. Ultimately, VLTC provided a great opportunity for short sellers to generate great profit by shorting into a parabolic move. Number 4, short bounce strategy. Short bounce SB. Difficulty hard. Orientation short. Suitability advanced traders. Introduction. Short bounce is the converse action to buying a dip. A bounce is usually the result of an overextended stock crashing dip before experiencing a bounce type of behavior. This is characterized by the definition of a resistance line at which traders attempt to short sell shares at a higher price than the peak, expecting a drop in the price. A SB play is usually applied to stocks that are overextended without a proper catalyst to back up a positive price action. What to look for? The search criteria for stocks suitable for an SB play is essentially the same as covered for the SOS strategy. Okay. The search criteria for stocks suitable for an SB play is essentially the same as that covered for the SOS strategy. Additionally, stocks that fall into this strategy have already experienced a price drop, a price increase at a support line, and might be close to a breakdown reversal at the bounce's peak. How it works. In order to play a SB type of strategy, it's important to know some of the technical factors about the stock. These elements should be of interest. 52 weeks high, 50 weeks low, intraday support, key resistance and intraday resistance, current price versus resistance and support, past behavior of the stock, recent average price point, and chart pattern. Knowing these elements allows the trader to perform a sound hypothesis on how the stock could potentially move based on the currently available information and how it was perceived by the will of the market in the past. Additionally, digging into the SEC filing to find out the financial health of the company and the actual worth of its products, services, reaffirm the speculation that the stock will eventually crash. Entry signal. Entry for SB strategy relies on resistance and key resistance levels for the given stock. It's important to watch the stock closely for an uptrending price action that tops but does not cross resistance lines. This type of behavior is indicative of potential breakdown after a bounce. Exit signal. A profitable exit of this type of play depends on your RMS. Based on the stock, its fundamental factors, and its price action, you may wish to have a preset profit target or wait for signal of price reversal before blowing your position. Your exit will be based on your hypothesis and how you expect the stock to behave in the short and midterm. More specifically to the SB plays, you will need to consider key support lines as potential stops for the drop in price. If stock has historically been able to maintain a support line, there is a great chance that it might fail to drop below that price point, unless there are fundamental factors to support that behavior. Number 5, strategy number 5, buy, pump, and dump. Strategy, buy, pump, and dump, BPD. Difficulty, medium. Hard, orientation, long. Suitability, intermediate traders. Introduction. Pump and dump are one of the original pillars of profitable trades in penny stock. While the rule of the game may have changed over time, pump and dumps are still a good way to profit. You will find detailed description of pumps and dumps in P&D chapter. I did posted the pump and dump that license already. You can go online to my KK Trader to search for that license, okay, if you don't understand it or you want to know more about it, okay? Okay, go on. What to look for. The BPD strategy is entirely based on promoted stocks. The basis of this strategy relies on identifying stocks that are being actively promoted by stock promoters. This implies subscriptions to promoters lists and being able to differentiate promoters with a good performance record when It comes to drive a stock price up from those who do a poor job at getting their subscribers to buy their stocks. How it works. The BPD strategy's basis is on recognizing good promoters and knowing when promotion will start. Promoters are known to tease traders with upcoming promotions. This allows the promoters to hype the stock before it's even announced. Entry signal. A BPD strategy requires a trader to enter a long position early in the pump. This usually implies buying the stock of a reputable stock promoter as soon as the stock promotion announces the security to trade. Since most P&Ds are OTC stocks, entry timing is an important factor, which is why it's necessary to enter these positions early. When the price starts gaining momentum, a good entry may no longer be a possibility. As you learned before, exit signal. A profitable exit on this type of play depends on your RMS. Based on the stock, its fundamental factors, and its price actions. You may wish to have a preset profit target, or wait for signs of price reversal before closing your position. Your exit will be based on your hypothesis and how you expect the stock to behave in the short and the midterms. More specifically to the BPD plays, you must consider price action, volume, and the L2, level 2 information. When a stock starts showing signs of slowing down or reversal, it's important to properly time your exit in order to avoid being caught in the downside momentum. Attention please here. When a stock starts showing signs of slowing down or reversal, it's important to properly time your exit in order to avoid being caught in the downside momentum. This is for the buyer, okay? I experienced this. When it is sideways grinding consolidation for a long time, you need to be careful, get out. When you do short, okay, I'm talking about short. If this is for the buyer, if going down means you lose money. If for the short, if the downside is good for your position, okay? Remember the long side or the short side. But when consolidation, you need to be careful. And when it is slowing down, okay, it is getting ready to do the reversal on the price. Okay, go on. Also, avoid remaining for long period of time, more than a day or two in a P&D, long projection, as given the untrustworthy nature of a P&D stocks, the stocks may be halted. I experienced halted when going down. That company only has 3%, but stocks going so high from a penny, like $1 or $2. My God, just be careful, okay? Avoid remaining for long period of time. Sometimes get halted, your money stay there, doesn't make any money, cannot get out when halted. This is what I mean. I experienced once. It takes over 3 months, from April until August 10th, to get out of that WORX. Okay, potential profit for long position. BPD plays that require experience and a very good timing skill. Moreover, they rely on proper knowledge of the capacity. Sorry, do it one more time. BPD plays that require experience and a very good timing skill. Moreover, they rely on proper knowledge of the capacity of a promoter to push a stock price up. Very few promoters are able to show this kind of performance when pumping a stock. Considering this, BPD plays can be very profitable by knowing that a reputable promoter is able to drive a stock over 100%. More importantly, these are easy profits if properly prepared and played well. Since these type of plays are fast moving and timely predictable, entries in these type of stocks should be timed very early in the promotion. Usually a successful entry will be done moments after the promoter's announcements of the stock in their promotion. You also must remember that it's unsafe to keep such a long position for the duration of the promotion and attempt to wait for the peak, as the SEC can halt these companies because they often don't respect regulations. Number 6, strategy number 6, short pump and dumps. Strategy pump and dumps, SPD. Difficulty medium hard, orientation short, suitability intermediate, advanced traders. Introduction. Shorting pump and dump is truly the heart of the original penny stock strategy. Even though the availability of good promoters has died down over the years, there are still some promotions that are worth of the time and can offer some very profitable opportunities. SPD plays are the other side of the BTD strategy, buy, pump, and dump strategy, okay? It's opposite. Instead of betting odds on the upside, which can potentially reach new heights with every promotional emails, the downside is insured after a certain period of time. What to look for? The research parameter for the SPD play are exactly the same as the BTD strategy. A pump and dump stock can be profitable in both the upside and the downside if played properly. How it works? Being on the short side of a P&D requires experience and timing. More importantly, it may require the use of the position boxing technique. The reason for this, as described, BPD is that available of shares to short for these type of shares is often scarce and may require a trader to enter a position much sooner than the readiness of the price to crack and dive. Entry signal. Entering a short position for SPD strategy considers price reversal after the stock price has been overextended for a certain period of time. A price reversal is often followed by the dump phase of the promotion, which results in a significant drop in price. Keep in mind that the promoters may continue pumping the stock following a price reversal and the seeming start of a dump. Yes, I saw that. So be careful. Take profit in case you lose your profit back again. The position back be pumped up again. So when you're short, you gotta squeeze and it up. Maybe you have to, cut a loss. So take the profit when reach the major support, okay? Exit signal. The beauty of a P&D is the fact that considering the shady type of a company represented by the stock at hand, the price has little to no chance of recovery. This essentially means that you can ride a position in a SPD strategy stock all the way to the bottom. Yeah, I saw so many stocks from the pump at the peak and all the way for a few days or a couple of days, all the way from, for example, $5 or $10 all the way to $1 or $2 something. So if that's the case, you don't miss the ride all the way to the bottom. So just do your own analysis, do your own judgment, take the ride. Yeah, don't miss that huge price reduction when you're shorting a stock, Okay, go on. Of course, as for every position taken, your RMS applies, and you must respect your absolute stop rules. This is very important, okay? Stop rules. That being said, once a promotion is over, this is often not necessary. Case study. For the purpose of this case study, we will look at a promotion pushed by Elite Penny Stocks and Stock Tip magazine on American Ledger Holdings, Inc., also known as AMLH. This stock was very heavily promoted, prompting numerous emails per day for longer than usual promotion context. A couple of weeks prior to the portion start, Elite Penny Stocks sent a mailer campaign that stating that they would announce their next pick on January 20th, 2015. A few weeks later, another promoter sent email saying, buying AMLH as investment opportunity. The stock started with 10 cents a share, gapped to 14 cents, and crossed 20 cents mark by the end of the day. Just at the end of the day, doubled, right? 10 cents to 20. Doubling the price per share, it reached 40 cents. That is 4 times its starting price. As the promotion ended on February 17th, the stock price dropped considerably. Potential profit for shorting position. Profiting for a P&D on the short side can often mean insured profit if timed properly. Considering that the only reason that stocks such as AMLH have such a dramatic increase in price is the paid promotion that supports it. It's usually safe to assume that the price will drop quickly with little chance of the recovery. In fact, actually, the price of AMLH dropping way below its promo price ending at 3 cents per share. Oh my God. So guys, be careful when punting and dumping. This penny stock is just like that, but people really can make money from the pump and dump. Okay, go on. The difficult part about shorting a PND, such as AMLH, lies in the timing and the availability of shares to short. In the specific case of AMLH, share availability was scarce midway through the pump. This usually means that it is necessary to box the position in order to be able to profit from it. Oh, I typed two from it. Sorry. Okay, next page. Additionally, timing this stock was difficult, especially for those not boxing their position midway through the pump. It seemed as if it would end. However, the promoter ran more campaign series, sending the stock soaring from the mid 20 cents to a high of 40 cents. This essentially resulted in a massive short squeeze, driving the price up faster. Finally, stock was unable to maintain its 40 cents price level and started tanking. While the promotion was still active and traders became more aware of the worthlessness of the company. Notice here that shorting a PND requires experience, understanding of how OTC stock work and how promoters operate in order to pump their stocks. More importantly, it's crucial to remember that timing is important for such a play. And the boxing positions like these usually reduces the difficulty of this kind of trade by ensuring an early entry into the position without sustaining considerable losses on the upside. Okay, this is all about the strategy, 6 strategies from Tim Sykes, the book. The 7 steps was the one I posted the video last week, I think, previously. And those 7, this is number 6, we had 6 strategies here, and the last steps is the 7 steps strategy. That's the framework, as a stock traders framework. But anyway, today we have 6 strategies. Okay, 6 strategies. That's the sample for trading stock, penny stocks. Okay, and I do believe when you finish all of the courses here, lessons here from the millionaire that taught over 2 decades, Tim Sykes. I believe one or more of my viewers for this video must be a millionaire after trading constantly profit, profitable constantly. But learn these strategies is very important, very, very important to be a future millionaire. You need to learn all the basics, strategies, okay? This is why I promised to give some of the watch list for long-term holding, but I want to do this one first because now the election, is going on. We are not sure who is the president, what are the stocks, the directions will go, everything we are now kind of watching. So we use the time to study strategies, get them very, very, very familiar of the strategies. So when you trade, you are very comfortable and you do know what you are doing. And you do recognize the price action and what strategy you are going to use. I believe one or more of my viewers here will become a millionaire, okay? I'm so confident on this. So be following me. Click the describe so you won't miss anything. I will have more lessons from the book, The Complete Penny Stock Course, okay? From Timothy Sykes. I bought a book at the last year's summit. I took the pictures with him. You saw that at the beginning. Maybe you want to see it one more time. Hold on just a second. I will show it one more time. This is me. I bought the book. I took a picture in front of the stage. Me and the side, he signed the book, actually. And I bought the book at the conference. And this is the big banner. The book was written by him. Okay, I hope you guys like it and subscribe. Please click the like button. I do this for everybody to be millionaire in the near future. Okay, click the like button and subscribe so you won't miss anything, and click the bell. Then when new videos coming up, you will get a warning. Okay, thank you very much. This is a long video. I hope you guys enjoyed it. Learn it, please study up. So one day you will be a millionaire. Please tell me when you are a millionaire. I want to interview you, how you learned and how you practiced. Okay, click the like button, subscribe, share the link. I want more millionaires, okay? Share the link to your friends, your relative, whoever you want him or her to be millionaire too. I thank you very much. Thank you for watching. Enjoy your evening. Thank you. Bye-bye.